Hello, everyone. Thank you so much for joining us on this episode of Dreams to Realty, episode 8, for property insights into co-living and housing affordability in Australia. And today, as usual, we have Susan Farquhar joining us. She is the Managing Director at Colour Property. And today's episode will be very interesting because, as well as Susan's insights on how business strategy is helping to alleviate the housing crisis that we are experiencing right now in Australia, we also have the insights of a chief economist, Peter Tulip, from the Centre for Independent Studies, joining us today. His previous work includes in the research department for the RBA, that's the Reserve Bank of Australia, as well as with the OECD and with the US Federal Board of Governors, I believe. So it should be a great show. So taking a look at the economic overview just before we get started, inflation seems to be at about 5.3% from the most recent reading. We've seen unemployment decrease a little to levels closer to about 3% or thereabouts, and there's been some wages growth. Now, all this seems to be the new reality post-pandemic in the post-COVID society that we're living in, which is creating the government to come or to address public policy with more of a values-based system, which I'm really interested to hear Peter's insights on. Australia, as you know, is a liberal democracy. We have a free market capitalist monetary policy. And all that is how the government, well, using that framework is how the government now sets policy to help society run smoothly and to keep it as fair and just as possible. But we have seen a lot of divergence, a lot of disparity between the rich and the poor, which started, probably back in from the Industrial Revolution, but also was exacerbated in the late 20th century. And it'll be interesting to see how policy is going to be changed to try and create more equality in our society. So, Peter, if I could ask you the first question. We've seen home ownership rates decrease significantly since about the 1970s, and it's continuing. Yet, it seems that there's been a lot of money invested in what we call real property, which could be also commercial property. How does all this come together? It doesn't seem to make sense to me as a researcher, someone on the outside looking in who's trying to work out what's going on. Could you help shed some light on the situation, please? I think the first question I had prepared for you, if we can take a look at that, was at the recent Senate meeting, it was discussed that housing could now be considered a human right. And how important will this shift in paradigm be for developing public policy accordingly?
Hi, Sage. So there are lots of questions there. The problem we have in the housing market is that for several generations, demand for housing has essentially been increasing about 3% a year, but the supply has been increasing only by about 2% a year. So you've constantly got demand outstripping supply, and as with any other market, that leads to higher prices. So prices and rents are both rising substantially. There are other things ladled on top of that. In particular, there's been a big reduction in interest rates, which has also boosted prices. But the problem for society, for Australia, is that we're not building enough to meet the demand. And that's because of planning restrictions, that we have limits on how high buildings can go, on how dense they can be, on where apartments can be located, all sorts of other restrictions. And that really limits the supply of housing, and as a result, it drives up the price. So that's just background before I actually get to your question. When you ask about is housing a human right, I'm not sure what that means or what the relevance of it is. So sometimes people talk about it as though it means the government should provide everything, but that's not the way we organise the food market or the clothing market or other necessities. It's essentially a market economy, and if there's a demand for food or for clothing, then businesses provide it. And that could be the same with housing, only we have these planning restrictions that stop builders and developers meeting the demand that's there? And I'll stop there.
Yes, thank you, Peter. I understand you do a lot of research in the area, and that's why I've approached you to help us understand what's going on. But I believe it's not only the planning restrictions, it's also the parliament. I mean, we've got Green senators who sometimes block a lot of developments of new apartment building, yet they're the ones sort of fighting now for more rights and rental caps and things that would hopefully alleviate the rising rent that people have had to go through to maintain their mortgages, with the rate of the interest rate, so the cash rate increasing significantly over the last few months. Just looking at some data before we move on, apparently now there's a lot of people living in poverty or under the poverty line. We're seeing 1 million more people, including 1 in 7 children now living below the poverty line. This is data I've taken from a newspaper article I saw this week. And this is in New South Wales alone. And how do you see housing affordability schemes to create a risk of negative equity happening? I think Susan or Peter, does anyone have any insight on that to share?
Susan, do you want to go first?
Sure. Yeah, sure. I think just to your first point, Sage, about is housing a basic human right. I'm not sure that the government providing housing is necessarily, that's sort of what has the response has been, but I don't know that that's actually what's necessarily meant to be being addressed, right? And I think Peter talking about the shortage of available housing for people who can afford it is actually what's critical here, and that has been an ongoing trend for a long time about not being able to, just not adequate supply in the market. It is interesting, though, looking at it from a finance perspective as opposed to a social or an economic perspective. Not every country in the world is as favourable to the systemic and structural, in terms of the systemic and structural response to property being a desirable asset class, right? So in terms of our taxation system, negative gearing, capital gains tax, reductions, even our ability to leverage the banks, right? There are some countries in the world where there essentially is no investment housing as an asset class, right? Many places in Europe where there just aren't, green fields ready to be continuously developed, Mm-hmm. So I think that's probably what you're thinking of there, Sage. And I think sometimes in the media, it's the nomenclature that trips people up in terms of understanding what is actually being addressed or discussed. Mm-hmm. So I think that's probably something and I think, Peter, that's a really interesting viewpoint, about at what point does the government step in? Food and clothing are not, they are considered basic human rights. I think according to the UN Charter, so is shelter. But whether the government should provide that or not, is given the fact that we are in this economic environment in Australia of free market conditions. I mean, look at what happened to the price of bananas after, the cyclone swept through Tully and, that whole area up in northern Queensland. So, should the government have come in and subsidised the cost of bananas? Well, no, probably not. You just forego your banana smoothie for a few months until the market regulates again, the supply picks up, and then the demand, kind of goes back into equilibrium. And I think that is a fundamental underlying issue here, is that the supply and demand equilibrium has been out of whack for such a long time, and that has been further exacerbated by having an historically low interest rate environment for the past 6, 7 years, and then also the inability to even deal with the land development that we had in the pipeline during COVID, particularly in Victoria, and then supply chain problems with the cost of property going up, fixed price property, really affecting the ability for builders to build on schedule and at the price that they expected. So, what happens there? Well, because the government isn't expected in this country to provide, significant low-cost housing for the population based on the demand and based on the assumption that it's a basic human right, it's property investors that have been doing that. So even though it's all well and easy to say, property investors are, nefarious and, capitalist money-making machines, well, yeah, I mean, they need a return on their investment, but they've also provided a huge amount of housing availability, for people that otherwise would not be able to afford to buy their own properties.
Thank you, Susan. Yes, I think the data shows that in 2020, the New South Wales Productivity Commission estimated an accumulated shortage of 54,000 total dwellings in 2020, which was projected to increase to 100,000 by 2038. Peter, do you have anything to add on that? I know you've done extensive research on this.
Yeah, sure. So you mentioned poverty, and it's one of the real problems in the housing market is that many people with very low incomes have difficulty making the rent. And one approach to that is for the government to provide public housing. But and that's traditionally been a leading way that governments have done it in Australia and other countries. But there have been lots of studies about public housing, and they keep finding huge problems with it. So there's a 10-year waiting list to get into public housing. And even if your circumstances justify a certain kind of housing when you get on the waiting list, they'll have changed in 10 years' time when something finally becomes available. And then they change again as you're a resident there. I mean, so people find jobs in other parts of the city. Their family situations change. There are a lot of reasons why giving people public housing is just a very inflexible way of helping them. And so the way we deal with basic necessities like food and clothing and others is the government gives people cash. And if bananas go up, people don't buy apples and oranges instead. People can change their own arrangements to suit their own circumstances. And that's a more efficient way of allocating housing than public housing. The other big problem with public housing, of course, is that it really concentrates poverty together, often in one big building where it compounds and develops all sorts of social pathologies. We're much better off spreading different income levels, sort of, I think it's often called salt and peppering, around the city, so that you don't get concentrations of poverty. And the government does this through what's called Commonwealth Rental Assistance. It's one of the biggest single housing programs in Australia. We spend about $5 billion on giving people on low incomes rental assistance and then letting them choose the housing arrangements that suit them best. And that I think is working better than the public housing schemes that you referred to earlier.
Yes,
yeah, I couldn't agree more with that. There's been a move away from public housing in that concentrated, type of, it is very stereotypical, but the type of, renter, or I guess, or tenant rather, who is likely to be in that type of housing, and a move towards. I know this has been something that's been in the investment world a little bit, property investment world, of dispersed social housing. So in new developments where 10% of the development has to be for these low cost housing, models, but they're actually subsidised by the government for the investor or for the owner, so that the tenant can stay there. And that's much more successful socially because if you think generationally, the kids that are, you can only be what you can see, right? And so if you see the accountant coming home at night, or the doctor or the lawyer or the hospitality worker, and, you might not feel like you're in a position to ever be a doctor or lawyer, but, maybe you can see the hospitality worker who goes on holidays to Europe every 2 months on a working holiday, or, is able to do other things. Like, just some examples, obviously, but to see successful people around you and to see more than what you already have in your four walls, as well as, some of the other antisocial behaviour that can occur in these public housing developments. Drugs and crime and all of that kind of thing. So it's far more successful from a social perspective to have that salt and peppering, as Peter said.
Thank you. Yes, I think more stimulation will create, more social cohesion and more just opportunities for people to integrate into society and not be segregated based on, I think, Peter, you've brought up the issue of a willingness to pay rather than a demographic approach in one of your research articles, which I think is really interesting. But yes, I think just one more piece of info I'll just bring up before we move on. The investment into real property, which was non-residential, grew by 15% to 64.7 billion in 2016 to 2017, from 64.7 billion up to 74.7 billion in 2020 to 2021. So that's a big increase, and that's non-residential. So I think there's a lot of vacant buildings in Sydney. Why can't they be rezoned to be used more effectively, as you've mentioned, Susan, perhaps with some sort of build-to-rent schemes? I know there is a build-to-rent scheme at the moment. Do you think, Peter, that the current inflation rate could be helped or eased by these type of, sort of out-of-the-box thinking systems? And could you also just explain the notion of transitory inflation and why it was used by so many economists and politicians during the 2021 COVID era?
So, Susan, did you want to talk about property first?
If you like, yeah, sure. So I think, in terms of the commercial aspect, the out-of-the-box solution has mostly been a commercial out-of-the-box solution with pop-up shops. That's what we've seen in the last decade. That's probably not quite the last decade, maybe, I don't know. But yeah, just, the pop-up shop has been sort of like the latest cool thing. And that's, using a commercial property and not being bound to a long-term lease and having the opportunity to try on the idea from the, people with the idea first, as a kind of almost like a test market with the view, I guess, commercially to potentially taking over the lease. I think part of the reason why there's been such a desire for non-residential investment has been the changes that happened prior to that, but with the self-managed super fund laws. But that doesn't really relate to the spare properties. The best way, I think, to, and I'm not a financial planner or accountant, just, my disclaimer there. But from what I have seen with my financial planning background and work in this area, has been where somebody setting up a self-managed super fund uses their fund to buy the property that they are commercially active in. And that way the business can actually rent the commercial property that the self-managed super fund owns. And I've got a lot of clients that are in that position, and that was awesome for them during COVID because it gave them that flexibility to change their rent. And now they're kind of catching up on the rent and putting that back into the super. I don't think that's usually what it's used for. That was an emergency kind of situation, but it does allow them to sort of tweak their super balance somewhat by adding more into their super fund, paying off the asset much faster. So I think that will be a contributing factor to the increased appetite for commercial away from residential for investment purposes. As for build to rent being repurposed. That's a, I don't know. I mean, we are seeing that actually in the CBD. We're seeing a real trend towards that sort of New York, Hong Kong, Singapore style living of luxury accommodation that has a lot of amenity that are vertical communities within the CBD. Melbourne is doing that probably better than any other city in Australia that I've seen. And it's not just attracting holiday makers and like doing, Airbnbs. It is actually residents. And a lot of downsizers actually are liking that. They've had their boring 20 years in the burbs and they want to sort of experience some life, and do their, enjoy their retirement a little bit without necessarily traveling outside of the country a lot. So I think there is a change, but that is happening more with either knockdown rebuilds, so that infill development in the CBDs, or older buildings, getting a repurpose within the building. I don't think that accounts, though, for what you're talking about in terms of a lot of vacancies. And I think that's probably that data has probably been skewed a little bit during COVID. It'll be interesting to see how that rectifies over time.
Yes, there are lots of things I'd like to comment on. Just one, I very much agree with Susan about vacancies. We're still in the aftermath of the pandemic and people haven't decided whether how much they'll work from home and how much they'll go back to the office. And yes, there are lots of commercial vacancies at the moment, but I suspect, well, we don't know, but it's a big possibility that they will quickly disappear if people do go back to the office. It was just in the paper yesterday that the Commonwealth Bank, for example, is telling all of its workers to come back into the office. And if that happens on substantial scale, then those vacancies will be fairly quickly filled. On build to rent, there's a big problem with the tax system, and in particular with progressive land tax, that if you just own, say, one rental property, you don't have to pay much land tax at all. But once you own, I think it's $6 million in New South Wales, but it varies in every state, you start paying land tax at a rate of above 2%. And when you compare that with the rental yield on lots of residential properties of, say 3 or 4%, the land tax is eating up a huge amount of it. For people that own, are above that, I think the threshold is something like $6 million. Anyway, it's essentially you cross that threshold once you build a block of flats. Once you go above several stories, you're paying the top threshold. And it's not economic for one landowner to own a whole building. Instead, the tax system has a huge bias towards individual landlords just owning one property. And so because of that, you can't build a block of flats and rent it out without paying these penal tax rates. And that's why Australia has this very unusual rental market that's dominated by landlords just owning a single property. And that in turn, and that really kills the build to rent sector. It's viable for students and tourists, and there are pockets where it's viable, but in general, it's on nowhere near the scale that it is in Europe and America, for example, where it's most of the rental market is owned by huge corporations. And as a result, they're very happy to give their tenants long security of tenure. Whereas in Australia, where if you've got a landlord where most of their wealth is occupied in just one single building, they want to keep it liquid because their financial circumstances may change, or they may retire, they may decide to invest somewhere else, whatever. Interest rates may change. And so we have this big problem in Australia of security of tenure that I think is ultimately attributable to our progressive land tax system.
Yeah, there's a land tax free threshold in every single state. And, from gosh, I think Victoria's just recently changed their law, so I can't remember. I'm not exactly sure what that is at the moment, but up to 600,000 land tax free on the land, right, for an investment property. Your owner occupier is exempt. So like you said, Peter, I haven't seen very much build to rent happen in Australia, and the only people I know who are doing build to rent are actually the developers keeping the properties. But the developers are also, they own the rent roll. Okay, so the rent roll is the asset that they're actually developing with the view to potentially selling it at some point, because rent rolls are hugely valuable and quite easy to get funding on. And there's a lot of, seems from my experience, which is not vast in this area, but there seems to be a lot of acquisition and divestment of rent rolls across real estate agencies. I know Mirvac went into it for a little bit. I don't know if they're still doing it. I've seen a little bit of it in Queensland, but again, I don't know whether that stayed. And in fact, for the Cala Air product that we've already spoken about, Sage, which is just for your benefit, Peter, and any new listeners, it's a very, very high cash flow property type that is designed specifically for this economic environment of a high interest rate environment to help investors pay for the shortfall in the rest of their property portfolios. It's not just it leverages the algorithms of Airbnb and bookings and stays, etc., but is targeting not just the holiday makers, but also new skilled migrants who can't find long-term accommodation in this country, insurance companies who need accommodation for people when they're doing stuff to their houses, repairs or whatever, and NDIS while they're waiting for their forever home, right? So that works, and we're finding that some of the stock that we are getting for our clients is actually developer stock that has been held back, maybe some of it has part of the reason why the developer is divesting themselves from that stock is exactly what you're talking about, Peter, is that rolling land tax, that scaled land tax. So, I think sometimes developers will hold the stock off just to, like the last 10%, they'll get their pre-sales, et cetera, and then hold it off to just, assuming that the market will keep increasing. And then when, the property's built, they'll make more money out of it. But yeah, I don't think Australia's just not geared for that. In fact, there are only 2.05 million property investors in Australia out of our population, and only 71% of those own more than one property. So there you go.
Yeah, and which is just completely different to other countries.
Yeah. And I think part of the reason too, Peter, is that Australians tend to invest in their own backyard, which is probably the stupidest thing they can do. Really, if they're looking at what's going to be a good return, they just go, I know this area, I like this area. But that concentrates the land tax as well, right? If they diversify their exposure, then they can take advantage of that land tax free threshold in other states, because that is a state-driven tax.
Yeah, I mean, and the self-managed super that you mentioned magnifies that problem. When people's business goes bust, their retirement income goes bust at the same time.
If they can't rent it out,
everything goes wrong at once.
Yeah, that's a good point.
On that note, I think the recent data from the ABS shows that there's 9.8 million households in Australia. That was from 2021, and 32% of those are without a mortgage and 35% of those are with a mortgage. So, I mean, that means that there are a lot of people out there who are sharing still at this stage. And Peter, if we can go back to the transitory inflation and how property prices may be affecting this and other economic data, because I really would love to get some insight on why so many people thought inflation was transitory. If you could shed some light on that, please.
Yeah, so it's I think a very different question to the housing issues we have been talking about. So it's been a big issue in monetary policy that the Reserve Bank of Australia was keeping interest rates low, down essentially at zero in 2021 into 2022, even though there were growing signs that inflation was going to increase. We saw a lot of individual prices rising, and the Reserve Bank held off from increasing interest rates the way it normally would, partly because it thought those increases in prices it was seeing were going to be temporary or transitory was the word. And one reason it thought that was because wage growth had remained very low. And this was partly a response to the pandemic, with very high unemployment had a subdued effect on wages. And in this, the Reserve Bank was wrong. That they thought there'd be a spike in inflation, which would soon come down. So I should say not just the Reserve Bank, but pretty much every central bank around the world had this view that the increase in prices as we came out of the pandemic would be a brief spike that would, and inflation would go back to moderate levels. And it didn't happen. The inflation went up and then it kept going up. And as a result, central banks in Australia and almost all other countries are increasingly raising rates, and they've had to raise them more and at a faster rate than at any time in living memory. That there's a big worry that inflation is going to get out of control, and they're raising rates to stop that.
Okay, thank you so much for that. So just staying on that tangent of thought, if we could, how will the recent changes to the RBA impact the monetary policy, including less meetings next year? Could that mean less interest rate rises or increases, I should say? And what impact will the unemployment rate and wages growth have on the inflation rate? And one more thing to add to that, the economy is expected to maybe compress next year. How is that going to affect the housing markets, if you could?
Right. So there are lots of questions there. To start with, one of the things, we've just had this big review into the RBA, which has, I think it's over 50 recommendations for change. And a week ago, the Reserve Bank announced an initial response to the review, which included a bunch of changes, one of which was that it's going to move from 11 meetings a year to 8 meetings a year. And combined with that, it's going to have those 8 meetings. So it'll have fewer meetings, but it will have longer meetings. So the meetings will now be 2 days. And a lot of this was, I don't think this will change the setting of interest rates in any discernible or predictable way. But the point of it is that the Reserve Bank thinks it needs to give more thought to longer term issues in monetary policy. There was a big worry that what they were doing was just reading the previous week's newspapers, and if the news was bad, they'd react one way. If the news was good, they'd react another way. It was very reactive and with a big focus on the constant flow of daily data. And because of that, they were not paying enough attention to their longer term objectives. And this was reflected in the Reserve Bank missing its targets. So the Reserve Bank has a target of 2 to 3% inflation, and it also likes to stabilise unemployment around its sustainable level. And they just haven't been doing that. Before the pandemic, inflation was too low, unemployment was too high. Now we have the reverse of that. And so they've only been on target for a very tiny fraction of the past decade or so. And many of the moves that were announced last week are attempted to capture that and to give the RBA more of a focus on the big long-term issues And so it worries less about the day-to-day noise. I mean, you asked about lots of things in that question, but that's one of the interesting things, I think.
Thank you. And what about economic growth? I think at the moment we are not in deficit from the recent budget. It shows that there is some profit there in the Australia's RBA. How do you think that's going to be impacted next year when the economy is meant to deflate a little bit?
Yes. So economic growth is, I mean, depending on how you measure it, or running at maybe about 1%. And particularly, I mean, looking forward, it's been higher than that over the past year. Whereas we're now expecting population growth of, I think, about 2%. So average GDP per capita, so in a sense, sort of average incomes projected to go down over the forecast period, which is, a bad, unfortunate thing. But the Reserve Bank thinks that that's necessary. And in fact, the Reserve Bank is deliberately trying to slow the rate of economic growth so that, because it thinks that the economy is overheating, that there's too much spending at the moment, and that's reflected in an unemployment rate of 3.5%, which is its lowest rate since the 1970s, longer than most Australians have been alive. And it doesn't think that that's sustainable, that there are so many labour shortages, employers bidding up wages, and workers are demanding wage increases. And that's what happened back in 2008. Last time the unemployment rate was low, and it's what happened in the 1970s. And when you start getting wages, employers outbidding workers and poaching workers from each other, and wages accelerating, that will often flow through into prices, and you get accelerating inflation, which the community very quickly says it won't accept. And then they throw on the brakes, and we often get a recession as a result. So the Reserve Bank is trying to smooth things out so that things don't get out of control like that.
Great, thank you. Just from a recent report from the ATO, I'll just add on to the end of that it found that 64% of people who own investment properties have an income under $80,000 per year, which I find really interesting. So it shows it is really those mum and dad investors who are sometimes villainised for increasing property prices for investing too much in it, which brings the question of, is it better to pay off your mortgage or to use equity to buy more homes? How does that, affect the whole market dynamic? And does that increase prices, I suppose? That's another question that comes to mind. But Susan, if we could please discuss where you believe the logic comes from the government, or what logic they're using, where they seem to put the onus onto the organisations that try to find solutions for affordable housing to come up with business strategy instead of, doing the socialist type of approach. Do you have any insight on that, please?
So the average investor, it's been a while since I looked at this, so it might not be exactly right, but the average investor in Australia is a married professional man who is a teacher and earns $79,079 or something like that, right? In terms of my anecdotal research, though, in my clients and the people coming to me, I would say there's probably almost a 50 in that $80,000 cohort. They're either the young professional, usually male, but not always, and in Sydney, rent vestors. So, and that speaks to the second part of that question, meaning that they don't want to go and live in Penrith, right, which is where they can afford. They want to live in Bondi, right, or Balmain or wherever it is, Manly. So they want to rent where they want to live, and they invest to make money because they're educated enough to understand that that's where it's at. I actually wrote an article recently called Are You a Surgeon or a Teacher, in terms of your investment profile. And when I looked at the ATO data, the majority of investors, it was the top 10 investment employees or business employment sectors, and the highest was the tax deducting persona, which was the surgeon who was on $250,000 a year, and then the next one was the teacher. Right. So usually a school principal, actually, who was looking for retirement security. So there are different strategies, for my clients. And often that's part of working with me, is unpacking what that strategy is. And it's often a mixture of both, right? It's often, okay, your immediate concern you think is tax deduction because you are high earning, but you haven't, if you're self-employed, you might not have been putting as much money into super as you could have over the previous 20 years. So you probably need to be looking at that as well, and they might not have considered that so much. What was the second part of your question, Sage?
It was about
policy with governments. Yeah. Look, in terms of the taking the socialist approach, I think we pretty much covered that off. I think the research would indicate that it's not really working. Firstly, even the government can't keep up with the demand. We're not releasing enough land. We're not fast enough in terms of cutting through the red tape. We don't have enough skilled migrants at every step, from working at the council level and checking plans, and it's a big deal, like building a house. So even the civil, like the engineers, the machinery operators for preparing the land, to do the civil works, and much less what you would typically think of with the architect, the builder, the planner, and the subcontractor, and then everything else. There's so much that goes into releasing a new greenfield development. A lot less required for an infill development, which is like knocking down and rebuilding, like you were suggesting a little bit there with commercial property. So there are so many blockages along the way, from governments releasing new land. The biggest land release I saw, I can't remember what year it was in, but the Victorian government released 13 to 16 new suburbs in the western northern corridors, primarily in the northern corridor, actually, that went from what was typically the boundary to miles away. And I remember when I was going down to Melbourne and doing my research there, I got off at Tullamarine Airport and jumped in the car and went to the northern part so that I could drive back down through to, Brunswick, sort of thing. And I'm going through these suburbs like, Calcalo and Mernda and all these ones I'd never even heard of before, right? And I remember coming back to my team and saying, it's one thing to get so far out that you go through horse paddocks, but it's quite another thing to get to cows, right? And that was my observation, that this is a lot of land, and I think it's probably a little bit early for us to be looking at that. Now, of course, it's not, but we want to get ahead of the curve, but not that far ahead that we're not going to have any price growth for a very long time, and because the infrastructure isn't getting built, right? And that has been one of the biggest complaints with these new developments, is that, they're building all the houses really quickly with the promise of all this infrastructure, but where is it, right? Where is that shopping centre? Where is that planned school, primary, secondary, and non-government, right? That's the typical mix within a master plan development. So that doesn't work, I think it's important to be creating that supply, right? That is a really important part of this. We have been in deficit for decades, and we're about to accept 1.5 million new migrants in the next 5 years, I think it is. So how's that going to work? Where on earth are they going to live, right? So they might help build some of these houses, but I don't know. That's a big issue, right? That is a seriously big issue. And when I look at the numbers in our data, and then and look at the undersupply, supply and demand is part of our, the research that we do per suburb in Australia. There is nowhere, maybe very few places I have looked at recently that is in oversupply. And when it's in oversupply, Peter will be familiar with this, but it's a microeconomic tool that where supply meets demand at 3%, right, for housing. And for every 2% of vacancy, for every 2% of within that range, that you can expect 1 week of vacancy over the year, right? So when you are looking at them, I think Australia is at 1.7% vacancy rate, right? That means that you have less than 1 week per year for that property to be rented out. That's what you can expect as an investor. Okay, it's insane, right? So it's so far below the supply and demand, coefficient that that's really where the policy needs to start, I think. And then the rest works better with stimulus, with choose your own adventure. Here's some help with your with rental subsidies and that kind of thing. Not so much with cash. We haven't seen that work particularly well in the past. If you look at handing out cash as opposed to handing out other ways of stimulating the economy as an economic stimulus has kind of gone a bit pear-shaped. That and Peter would be able to talk to that a lot better than I can. But in terms of housing, I think it's better to provide subsidies on where you want to rent and allow you to make those decisions yourself, And that's where we're starting to see some innovation within my field with these new products like the CoLiving or, NDIS, or NDIS is a little bit different. That's about keeping people in their own homes for longer and not, overburdening the kind of nursing home system, because that's obviously caused the issues as well. People tend to be happier and live longer if they're in their own environment rather than in a nursing home, high care environment when it's not required. But certainly that CoLiving idea is working very well, because a lot of the new housing supply that is created is either new apartments or houses, family homes. Now, the problem with that is a new apartment is still relatively expensive for a single person. Okay, so for a single person, to rent out, say, a 1-bedroom apartment for, say, $400 a week when their total income part-time, right, and this affects a lot of women, is really low, so it doesn't actually solve the problem. It can actually create more social problems than it's trying to solve. And then a lot of the jobs for singles are not where these, greenfield areas are being developed. So when you're looking at the hospitality, education, hospitals, and other allied health, etc., where a lot of singles are concentrated, logistics as well, construction, there isn't enough appropriate housing for that cohort of renters, and they are people who cannot afford to buy their own property and probably wouldn't even get a loan. Even if they could use their rent to allocate towards their loan, they probably wouldn't get a bank loan.
That's a very good point about not getting the loan, because I think there's a lot of approved lenders for the government first homeowner guarantee scheme, for example, that's been extended. The boundaries have been extended for that one, but they're still requiring in some cases the 20% deposit. And it's interesting to see how, negative equity can be exacerbated by these schemes that only require very small deposit as well. What happens if the value of your property declines, which is a possibility. I mean, there's absolutely no saying that the property is going to go up for sure if you buy it. I mean, hopefully holding it long term will have a good effect. But yeah, you're right. It seems to be a more
stamp duty as well. Stamp duty is just prohibitive in many of our states. Stamp duty in Victoria is at 5.5% of the property value. So even if you can borrow up to 90% of the loan, then you also have to pay lender's mortgage insurance, and you have to pay stamp duty on top of that. That's a huge amount of money for a single person to have to save. Now, banks are being creative with that and coming up with other options like being able to leverage your parents or, you know, someone in your family's equity in their own own home with a like a family pledge type loan. But, you know, not everybody has a family that's willing to do that, you know, or has a family that's in a position to do that. So that's, you know, that again is not creating the social solution that is trying to be addressed with some of these schemes.
Well, I think the government's solution that they're discussing at the moment before they went on winter break, or the last Senate meeting, suggested that they were looking at investing $2 billion, and from the gains or the earnings from that investment, give at least $500 million to the states over a set time frame to build more houses. And they're saying they want to build about 30,000 more houses annually, I think was the figure that was provided. But Peter, I think what's really interesting from your report that I saw, if I could just present this data to you that I found interesting from your report, that apparently the average Sydney apartment sold for close to $1 million. And it only cost $594,000 to supply this. And so the excess there is being used in ways that are maybe maleficent to the, you know, creation of extra supply. Could you please shed some light on this for us, and what your, you know, how your findings relate to what we've been discussing?
Yeah, so those numbers apply to a builder that wants to go up. So they own the land and they're maybe building 10 stories. They'd like to build an 11th story. Those extra apartments would sell for $1 million. It only cost them $600,000 to build it. So there's a $400,000 profit on every extra apartment they're allowed to build. Why don't builders do it? I mean, there's this huge lucrative opportunity ahead of them. And the answer is that it's illegal, that in particular height limits, but all other sorts of planning restrictions just limit what builders and developers can supply. So there's an enormous demand for housing, and it's being frustrated by these planning regulations that stop people buying. And that in turn is largely because local residents don't like overcrowding. They don't like the traffic. They don't like the overflowing schools and other infrastructure that Susan was mentioning before. And they want to preserve the character of their neighbourhood. And so this is the big social choice governments have. I mean, sort of on the one side, you've got renters and future generations of home buyers all needing a place to live. And on the other hand, you've got these wealthy neighbours who don't want to park a few extra doors down, or are worried about a bit of shade in their backyard. And at the moment, we have a system where where those wealthy neighbours get a vote in the local council, whereas the potential renters or home buyers from outside the area don't get any vote. And so we've got this skewed system where the need for shelter and affordable housing is ignored in our decision-making process, whereas
so much for social democracy, hey?
Yeah. and the solution, I think, has to be that state governments need to take over from local governments, that the local governments are not putting the interests of renters and buyers at their forefront. They're worried about parking spaces and shadowing and things that are less important. Less important from a social point of view. And we're getting skewed decisions as a result. And that's why housing is so expensive and we have this huge shortage of housing.
I think too, Peter, to speak to that is that would have a much, much better effect than trying to have a rental cap, which is only going to dissuade investors who are providing the housing.
Yes.
Providing the stock.
I think that's exactly right. I mean, it seems appealing to a lot of renters to have a ceiling put on their house until they actually then have to go out into the rental market again, which typically they do every few years. And then they'll find out that there are no vacancies because no one's building extra housing, and they end up sleeping in a car. It's happened again and again and again all around the world, that when people have put rental controls on, it's backfired. It's led to big shortages that really hurt, in particular, the most vulnerable tenants, the ones with high turnover, the ones that don't look as attractive on the rental application. They keep getting rejected, and essentially they lose any housing at all. And the shortage gets worse. So I just completely agree with Susan on that.
I think as well, we tend to, in the media, cherry pick policies from other countries without looking at the whole picture. So we're looking at, say, rent control in New York without looking at the fact that they've got, I don't know what the population is of Manhattan, but it's an island that's 8 kilometers long, tiny little island. To be fair, it's sinking because there are so many high rises, and parking obviously is an issue. But people don't have cars. There's also a myth. I was actually reading a report about this the other day. There's this myth that as the population grows, there's going to be more of a squeeze on infrastructure, where the opposite is true. As the population grows, there is more investment in infrastructure because we have a better tax base, right? We have to provide this. We've seen that in Melbourne, fastest growing capital city in Australia, and it has had the most phenomenal infrastructure investment. Same with Brisbane, that had, like, when I was first researching Brisbane as a market, like about 10 years ago, it was $310 billion worth of infrastructure going into Brisbane, a mixture of government and private, and a massive amount of that was about basic services, like public transport, hospitals, schools. Quite a bit of that too was to help improve the potential flooding system with better drainage and civil works going in, and all of that kind of thing. But our services have got better over time for that reason. And I think it's a real furphy to be focusing on those things. But my point really is that we tend to cherry pick, and we've seen that happen, I think, with that build to rent strategy, where it's like, oh, hang on a second, great idea. I've gone to all the seminars that have been put on by people in the States. I see that that's a brilliant idea, but it just doesn't work, and if you look at the states itself as a model, which a lot of people have done, every state in America, it's not a very United States of America, actually. There are huge amounts of discrepancies with their laws, particularly with lending policy and taxation, and if you look at the, part of the social issues that were created when, the car industry pretty much shut down in Detroit. A lot of that had to do with the fact that the housing market was, or the lending environment, were non-recourse lending. So people could literally walk away from their homes without any recourse. So we don't have that in Australia. We do with self-managed super fund lending, but we just don't have that in Australia. So it's useless to talk to, as Australians, to talk to an investment company in Detroit and expect the same result. It doesn't happen, right? For a variety of reasons that a lot of those we've already touched on.
Well, I think it's really important to mention those, the older women and the people who are vulnerable, being exposed to domestic violence and things like that, because they're the people that are staying in these high risk situations because they can't afford to find other rental. And I think that's what the government's new scheme is hoping to ease or to help, offering some leverage to them with the allocation of those 30,000 houses to be specifically for those types of people. And the other thing you mentioned.
So can I say a little bit about that 30,000, Sage?
Please
do. It's tiny. we have a housing market of about 11 million dwellings in Australia. So the government's plan to add 30,000 extra dwellings is what, 0.2% addition to the housing stock. If you use economists' usual rule of thumb, which is that a 1% increase in the housing stock will reduce prices by 2.5%, then the extra, 0.2% addition to the housing stock that the government is delivering with its new fund is going to reduce the cost of housing by about 0.5 percentage point. Yeah, which is just trivial. I mean, that's takes us back to where we were a few weeks ago. It's barely rounding error. So there's all this fuss in the Senate over this, what is a very complicated way of delivering new housing, that's ultimately going to have just a really tiny effect on the housing market. And and that 30,000 is staggered over 5 years. Yeah. So you won't, I mean, when you plot the difference it makes to housing industry figures, you wouldn't be able to see it on a chart. What they're doing, I think, is largely symbolic. It's, and the fact that it's complicated for them is a selling plus, that they're trying to show a bit of action and they're trying to show a bit of empathy to show that they get it. But it's not delivering a relevant solution. Ultimately, if you do want to solve the housing shortage and make housing affordable, we need to build lots more housing. And that's not 30,000, that's hundreds of thousands every year. And that is the only way to get back to some kind of affordable housing.
Yeah, I couldn't agree more with that. It's almost statistically irrelevant, like you say. The issue here is systemic, and it's generationally systemic. And the only way to solve this is by cutting out the red tape for building codes, not for the codes, right, but for release of land and for height restrictions. Yeah. That's what I mean by that.
Yeah. It's the planning system. It's not the building code. In fact, there are arguments that maybe we should tighten up the building code, and certification has been a big problem. But
I agree with that, system. Especially if we're going to go to high rise. But just the release of greenfield, there's a lot of opportunity to do that. Couldn't agree more with that.
Yeah. Well, I think the Western Sydney tram line and the airport out there, that's interesting planning that's being put into effect now. But I have a funny feeling that these things do sit on the outskirts of the parliamentary discussion, and then when it gets these things move quite slowly, and then other things come as priorities and push these sort of innovative ideas to the wayside again. I think that could possibly be what's happening. I'm not sure, but I think...
And that's the huge problem, because when you look at the opinion polls, the housing shortage and housing affordability is one of the very top issues facing voters. And it's a bit of a puzzle why politicians aren't addressing it more directly. And, well, I say it's a puzzle. I mean, in fact, we know the answer. It's because local residents are opposing extra density in their neighbourhoods, and politicians don't want to have that fight.
That kind of speaks to the systemic part of it that you referred to before, where maybe it's better that the federal governments and the state governments, overrule the local governments, right? Yep. That local lack of democratic voice, really, when it comes to planning, because it's just a requirement. And is housing a human right? To go back to your initial thing, well, certainly shelter is a requirement, right? So whether you want to classify it as a human right or not, maybe that's not the right term in terms of whether the government should provide it. But that's not about the government providing it. It's about the government providing the conditions whereby the free markets can actually operate correctly. And that will provide the solution.
Yep.
So I think at the moment there's the National Housing Infrastructure Facility and the New South Wales Community Housing Innovation Fund. They're offered to organisations that focus on providing affordable housing. I've heard of illegal rooming houses, however, though, looking at shared equity and co-living strategies that are popping up here and there. There's a company called Invita that does do a build to rent type strategy and encourages people to invest this way, this sort of impact investing perhaps, but they're not operating in New South Wales. And I think there must be some sort of laws that are preventing them from building these type of properties here. And I was wondering if you could shed some light on that, Susan. Do you know what the difference is between a share house and a boarding house? I think there's 300 boarding houses in the inner west. But how does zoning impact the effectiveness of co-living in your opinion? And why are some of these illegal?
It's a really simple answer. It's about the amount of people who can be under the same roof at the same time. So, for example, the Calico product, if you like, that we've developed is about building purpose-built co-living homes that are essentially a highly spec'd 4-bedroom house, right? But they are where they're purpose-built is that they are essentially 3 bedrooms with 2 en suites and 1 bathroom. So every bedroom gets its own bathroom. It has a lounge room plus an extra living room plus the 4th bedroom that you cannot have a tenant in, because if you do go to the 4th tenant, then suddenly it's a boarding house, it's commercial, and you need to have fire extinguishers and exit signs and, glow tape and fire escape and a whole lot of stuff like that. Okay, so that's the difference. Okay. Forget the fact that at uni, you had share houses with 10 people in them or whatever, or 5 people. I don't know that we even considered that was whether it was legal or not. It was just a means to an end. But in terms of that's the code, right? That's the difference. So where it works well from an investor is that at the moment, what in our short-term memories would consider high interest rate environment, which in Peter's and my memories is probably not quite right. It makes sense because if you look at, say, a 4% normal rental yield, which is relatively generous, depending on the state, and say a 7% interest rate, already without any further costs, you've got a 3% deficit. So having the co-living where you've got you can rent out the rooms per room as opposed to the entire house where you get a higher rate per room, that works very well for the investor because the investment is then relatively cash flow neutral, or in our calculations based on the properties that we're recommending, there'll be a loss on, say, a $700,000 investment of around $1,000 a year, which most investors are happy to wear, right? Plus you also get the growth, right? So Cala Air is a high cash flow strategy. Calico is relatively neutral in terms of equity and cash flow. And then Cala Home is our traditional house and land type investment, and that is high equity and at the moment low cash flow, but used to be cash flow neutral, right? Depends on the interest rates. That's the biggest variable with that. So there's your answer. It's pretty simple in terms of why it's appealing to investors and why so many of them are illegal. But with every one of those property types that I've mentioned, we've also developed a specific colour concierge that wraps around that. And the thing that changes the most with all of them is the property manager. And you need a specific property manager. Well, we recommend doing that, a property manager who specifically knows how to manage these kinds of properties and is aware of all of that, has more regular inspections and knows what to look for if there is a breach of people living there. But they're great because they are catering for, the tradies and the nurses and the teachers and the retail staff and all of those singles that can't afford a 1-bedroom property on their own, want a bit more space and open environment than, a little bed sit in a dingy part of town. And, these are beautiful homes because they've got, you've got your own home, your own bedroom, your own bathroom, your own linen closet, and your own lockable pantry. And it's actually lockable pantries that cause the most fights when it comes to these things, or the food situation. So that's been an important thing that we're insisting upon with our builders, and keypads, digital keypads for each bedroom as well. So there's your answer, really. But
you.
It's not surprising that you've got a lot of illegal stuff going on, especially in New South Wales, where housing costs are so high.
One, if I can just add an extra dimension to what Susan said, is the problem of homelessness that it's causing. So the low quality housing that a lot of poor people used to live in is increasingly being made illegal. And you can argue as to whether a room needs a window or ventilation. Most people would think it should, but insisting on that increases the price and makes housing unaffordable. And then you get more harder to defend requirements like minimum floor size, or even that apartments need a balcony. And with all of these requirements, they may sound reasonable, and we don't like people living in places without proper ventilation and sunlight and a lot of these requirements, but they all add to the cost. And that cost is very clearly and very strongly adding to homelessness. The low quality accommodation that very poor people used to live in is increasingly being made illegal. And the alternative to that isn't that these people live in higher quality accommodation. Instead, they're out on the street or sleeping in their car. And there's substantial amount of research just showing that the shortage of housing that we're creating is the biggest single determinant of the rate of homelessness. And there's this big unintended consequence of the housing standards that we're imposing, in particular at the lower end of the market.
It's completely off the cards for a lot of people to even think about saving up that deposit that's required these days. And I think, I'm not sure why, but they don't really teach that in school, that you really do need to get a house. You need to work and get that as a priority before you do anything else. And I think in Australia, we value our space, and we're one of the most sparse countries. There's a lot of space around us, and I think it's a privilege that we really do enjoy. But a lot of us have just, we have to wait for inheritance before we get that property. And I don't see why they don't create a tax incentive for early inheritance, for people to release their inheritance to their children and offspring early so they can start investing sooner. Maybe that could be a solution, just throwing that on the table.
Because it's not the fairest way of allocating housing. I mean, it is a real problem that home ownership is becoming hereditary, and that you only get into home ownership if mum and dad were also homeowners. My sense is society is more inclined to discourage the inheritances than to encourage it.
Sure, thank you. And before we go, we're starting to wrap up now, and your insights have been so brilliant, because I'm sure you could talk about this all day, but we should start to wind up the discussion. Peter, there's going to be this influx of immigrants. From your understanding, how are Australia's policies, immigration policies and housing portfolios, how are they related? Are they connected in any way?
They don't seem to be, do they? I mean, there seems to be a real lack of coordination, that we're allowing in hundreds of thousands of new migrants without providing any place for them to live. This year, there will be a real tightening in the housing market, because the number of new households is going to exceed the number of new dwellings. And that's going to mean a further reduction in the vacancy rate and rapid increases in rents. It's a big problem. And I think in particular, it means that the federal government has to stop washing its hands of the housing problem. It keeps saying that it's a state responsibility, but it's federal government policy that is causing a lot of the real pressures we have. Now, I support a high immigration rate, but it needs to be, I mean, just as we provide all sorts of basic services and goods for the new migrants, we're failing to provide them with housing. And that's a failure of policy, which the federal government needs to take responsibility for.
And historically, we used to. Historically,
Yes.
we did. I mean, it wasn't nice housing, but at least it was a roof over their head while they got themselves on their feet.
Yeah, it was those funny semicircular huts.
Yeah, exactly.
I can't remember what they were
the
called.
Barracks.
Yeah.
Yeah. But the other thing too, if you look at microeconomics and supply and demand again, as soon as, price elasticity, as soon as you have that demand, but the prices change because of the lack of supply or because of changes to government policy, say the taxation of cigarettes or whatever, that's where you push the black market, right? That's where you create a black market. And that's, that has unintended consequences, right? So you were talking before about the rise of illegal boarding houses in Western Sydney. Is it a surprise? Really? Is it a surprise? And what's going to happen now if we have this huge influx of skilled migrants that come to the lucky country and go, where the hell are we going to live? Where are they going to live, right? That is a real question. Are they going to be forced to have, move in with a family because they might know someone who already lives here, and they might have 3 other families of that same generation coming to the country, and suddenly you've got 4 families in a standard 3-bedroom house somewhere. I mean, that's a big issue, right? And that is not good for society.
And so we're seeing just increasing media stories of people living in cars, living in tents, people taking shifts to sleep in a bed. Yeah. It's a terrible social problem that is fairly clearly attributable to government policy.
So if I could just ask a question about the term economic bubble on this topic. It seems that our economy is inflated at the moment. Is that the rapid escalation of market value that is the definition of an economic bubble, or one of the signs of an economic bubble? Would you say we're in an economic bubble at the moment?
I would not. I think when people talk about a bubble, they're often talking about irrational investment, and in particular, people buying because they expect prices to keep going up, and that ends up being unsustainable, and it can last for a while, and the famous ones have kept going on for longer than people expected, but eventually they burst. That's not what's happening in the housing market at the moment. It's not irrational for prices to go up. They're going up for clear economic reasons, which is that there's a shortage of housing.
Yeah.
And so typically in a housing bubble, you see prices increasingly diverging away from rents, so that rents remain flat, but prices keep going up in the expectations of future capital gains. But in Australia's current housing market, it's not that irrational fear of capital gains, because rents are going up a lot too. Rents are going up at their fastest rate for decades and decades.
Sorry, Peter, go ahead.
Yeah, and so we don't have a bubble, we just have a shortage.
The housing bubble too, please correct me if I'm mistaken, Peter, but can also refer to, this has happened in Australia not that long ago with overseas investors bringing their money to Australia, putting it into houses, but no one lives there. So you have supply that has not been taken up by the demand that is there. So, and that's a really big issue. And, the last census, 1 million homes in Australia were lived in, uninhabited. Some of that can be attributable to COVID and people being stuck overseas or whatever, but that's for our population, that's massive, right? And that also causes issues. So, or certainly doesn't fix the problem, right, Peter?
Yeah.
Well, thank you so much for your insight today. It was really valuable. A lot of great ideas being discussed there. And I think as we wind up, it's interesting to note that the federal government did say before their winter break that it is on the table to look at planning laws, zoning and unlocking land for new construction. So hopefully from these types of awareness raising discussions, we can try to sway them to make, more innovative decisions, hopefully that are more value-based rather than what seems to be a system that's targeting or is pointed towards the big money commercial investors. I'm not sure if I'm making any sense. Did you want to add on that or to help me understand that as we finish off?
I think as we've both identified, it's systemic. It's actually not about creative solutions. It really isn't. It's stop with the creative solutions and just address the basics. And I think then we're going to move towards what we need, which is a rental market and a housing market that is more in equilibrium, is closer to that 3% mark, which it hasn't been for a long time. And that is very, very simply and clearly about creating policy that allows for more houses to get built, more dwellings to get built, not necessarily houses, but more dwellings to get built that address all levels of society, right? From the boarding houses that will help to address homelessness to, the nice houses and for the migrants, all of it, that I think it's really, it's stop being creative, stop trying to appeal to certain interest groups, come up with a solution that is Australia-wide, and deal with it properly.
Yep, I agree.
I think
that's a very good summary.
Well, I think the property prices have increased this year. I think nationally about close to 3% and in Sydney 5%, but it's still about 6% according to CoreLogic data, under where we were in April last year. So I wonder what the trajectory is going to be. Any insights on that before we close off? Probably a good way to finish the discussion.
I think prices will dip again. I mean, just as I think interest rates will keep going up, and we've seen a temporary increase because I think people thought that we've seen the last of the interest rate increases. I don't think we have. And so further increases are going to be a very unpleasant surprise to lots of mortgage holders. And so we will see fewer buyers and more sellers. And I'm very often wrong when I make these predictions, as are most commentators, but my guess would be that prices will go down again.
I think that it's a direct correlation with whatever interest rates are doing, right? Property and finance are inextricably linked. There's no two ways about it. And when the RBA put interest rates on hold recently, every single property market in the country went up. Right. And then they put the brakes on again and it stopped. Right. And then it went up and now it stopped, so it's going to be stop start, I think, for a little while. But then I think as interest rates, which I think will probably start to happen next year, start to stabilize, decline, they bring, inflation back closer to that 3% target rate. I think there's still a huge amount of liquidity in the market and a massive amount of equity in people, underutilized equity in people's homes. And I think within, 6 months to a year, almost every market in Australia is going to go through the roof, and it's going to be, I think it will be one of the fastest. If you look at the property clock and look at the rising market and growth market, I think it will be the fastest rising market we've ever seen, that it'll just go from entry level to bang immediately, like really, really quick. So, yeah, that's what I think.
Well, thank you for sharing your opinions today. We really do appreciate it. I suppose where inflation's going to be and their predictions on that by the end of 2024 will have a big impact on on our economic, backdrop, where we're sitting with housing and cost of living. So keen to see what happens. But at the moment, I am living quite conservatively, much more conservatively than I have in the past. So yes, I guess I'm planning for the worst. Well, thank you again. And for anyone that was listening, I hope you enjoyed our conversation today with Peter Tulip, a Chief Economist, and Susan Farquhar, the Managing Director at Colour Property. The CIS, it's Centre for Independent Studies.org.au, has some great write-ups, some very interesting data and events. Please check it out. I'll leave the link at the bottom of this episode. Thank you again for joining us.
Thank you.
Thanks, Sage. Bye, Susan.
Bye, Peter.
Bye.